Hey everyone, hope you're well. Hey buddy. Said I wouldn't take. It was Top Step X, their platform. It's terrible, in my opinion. Hopefully buyers later popped after that mass consolidation this morning. Closed my PC and left. Hey Craig. Hey Ollie, how's it going? So the reason I mean, Top Step's a good prop firm. You know, I think they're all, they've all got their good and bad bits, to be honest with you. Um, but I think I don't really agree with Top Step X's platform choice. I just don't really agree with it, to be honest. I think it's not something they should be doing, to be honest with you. There's already extremely sophisticated platforms out there that they can white label, and they've went to some Sim2 funded company that doesn't have any clients to basically give them integrated trading view, and it also is a little bit. mm, I mean, I'm not too sure how I feel about the fact that they're not using, CQG or Sierra's Denali or Rhythmic, for example. They've got this in-house data thing that has problems every day. So I like the platform, but not their own platform. To be honest with you, I just think it's completely unnecessary. Just need to focus on being a prop firm and making traders better instead of giving them shoddy platforms. To be honest. No, well, no, not Ninja. Their own Top Step X thing. It's basically just, you know, it's just integrated trading view with some data thrown in. You know, it's not really anything to write home about, is it? Considering you've got like, I mean, you've got Sierra, Bookmap, Quant Tower. You've got tons of you've got tons of different platforms there. But I think Top Step's a really good firm. I think they definitely think they're better than Apex. I've been with both, traded with them both. At the end of the day, if you've got enough capital, I think prop firms have their merits, where um, they provide you a sort of environment. It's a stopgap between sim and personal account, isn't it really? Because they make the rules so difficult for you to pass. So this is the thing. Majority of people, if they're trading in a live environment, providing you're not, going all in into positions, and you've got your drawdown rules and everything along those lines that they put in. It's not really that real, because you can make 2k in an evaluation with Top Step as example, and then you're back to break even, but then you fail the account. I mean, that's not real life, is it? So just I would say that the main thing about these fir- prop firms and stuff is, if you do fail them, don't feel bad about it. I know a lot of people do, because what happens is you fail it, and then you go into a um you end up then thinking it's your strategy, but actually these things are made for you to fail. So it'll probably take you, it depends on the stats, man. It'll probably take you like 10, 10 of them to maybe pass. I don't know, your pass rates probably should be about 35, 40%, something along those lines. So, and you just need to make sure your ROI is good when you do it. But the only thing I then don't agree, I mean, I'm ranting here now, but the only thing I don't agree with is they put you they cut your losses. Sorry, they cap your scaling when you get into a funded account, and then ultimately they put you. I've seen them put dudes live with like 7K and stuff. I mean, it's ridiculous. You know, oh, you've made 7K after like 3 weeks. Oh, you're good enough to go live and pay professional data fees. Ridiculous. I reckon as soon as they start putting you live, if they, you should be copy trading these accounts. That's what they're there for. I see they've now released more copy trading solutions. So you should be copy trading these accounts because you need to take them for as much money as they can because they're not your friend, these companies. Like seriously, they try and pitch it like they're there to make traders better. No, they're not. Nothing of the kind. No company that would be there to actually back traders would trail your drawdown, and just do everything to protect their funds. And they all do that, to be honest. It's just an insurance model. Wow, NQ is dumping here. Okay, so we'll soon be at very low at this rate. So yeah, Ninja Trader's good. Ninja Trader's good. I mean, it's good for like standard charting and stuff. You'll get volume profile, and I've never really looked at the depth of market, so I can't really quote you on that. I would say that if you're probably just starting out and looking to get into order flow, just probably go with Jigsaw because it's pretty out the box. I think it's relatively competitive. I'll need to see what pricing there is before I can give an actual honest review on it. But I know a lot of people use it. Jigsaw's DOM is one of the best, um, but I don't think the charting is that fantastic. This is the thing, it's you can't really get the perfect setup with them all. I mean, Sierra is a pain in the neck to set up, and it's quite a fickle software to use. But once you get the hang of it, it's good. I mean, at the end of the day, it doesn't really matter what platform you're using. You still need to press the mouse at the right time. You know what I mean? So I don't know if anyone caught the sweep earlier of the previous day low here, and went back into the range as the retest. Now we're just dumping off. So we are getting into a little bit of lower volume territory at the minute. Ninja will do the trick, mate. It's not if you want to do like complicated order flow things, but it depends where you are in your trading journey, mate. But Oliver, yeah, did you take any positions today? The chart's been a little bit weird since the holidays, to be honest. But we do seem to be dumping right now. Look at that, we just sweeped that level and then ticked up like 8 ticks. Classic. So I thought I'd come live and we could hang out for the last hour and a half of the close. See if there's any real action. Just could be getting a bit of a sell off, to be honest. So did everyone trade today? How's your session been? What's all been happening? How's NQ going? Should tick down a yes here. Nice. Yeah, good decision not to trade if you're pissed off, Craig, or you're not having a good day. Over the years that I've traded, anytime I have a bad day and start clicking buttons, it never ends well. Nice. That's what I like to hear. Apex have certainly been changing the rules recently. I suppose you just need to follow the rules, but they make it very, very challenging. I'd say Apex would probably be the last resort, to be honest, once you've finished the other platforms. Hey Vic, how's it going? We're just currently watching ES dump here. We've now just hit the initial balance extension at this time. And here we go. We're just about to tackle Friday's low. Should maybe see a tick up. I really don't know how people can trade NQ on the DOM. You need to combine the ticks. Definitely. It's too hard to read. Look at this, just a constant spread with the best bid and the best offer. My stop ranges from 10 to 15 ticks. Depends on the market conditions. Like right now, when the market's like this, you're gonna need to have a slightly wider stop. So I would say no more than 20 ticks on ES anyway. If you're trading NQ, you probably need 40. But the thing is, you should be focusing on your profit factor and expectancy rather than a like fixed risk to reward. If you get in the trade and it's not going for you right, you shouldn't just hold it for the sake of it. It's not good for the buyers at the minute. Russell's just absolutely nailed that 100 odd lot there it was sitting. So we'll see if they can. We need NQ to go bid right now to try and drive this up a little bit, but it's not looking great. It all depends on the markets you're trading, Craig. So if you're trading treasuries, you can literally be getting away with probably 4 or 5 ticks. If you're trading, the thicker the market, the the less size you need, to be honest. I should probably rephrase that. The less stop size you need, I should say. Okay, we're just going to be approaching Friday's low. Let's put it in and see how it behaves. Normally the first time it gets to an inflection point in the market, you see a little bit of a bid off it, or you know, a sort of slight hit off it. So we're looking at 95.75. So look at the amount of orders down here. See how the market responds if it comes down, if it's going to hit aggressively into the level, and then we make a sweep back up. Craig, if you want to have a look at treasuries, I did a video on what market should you trade. I put it out last night, and it's just part of the sort of order flow series, because you need to pick a market that suits you as a person. Just because everyone trades NQ and ES doesn't mean you need to trade that. So it needs to fit your risk profile. It needs to fit, you know, how patient are you, what's just you as a person, you know. It's very much like a diet plan, to be honest. You know, it needs to fit your lifestyle and suit your needs, because if it does that, then it leads to consistency, you know. So if you prefer more mean reverting markets as such, well, maybe not in the last year, but you know, commodities is a good one. You know, the likes of ES and NQ, for example, they tend to take stops aggressively. So this would be not uncommon right now for ES to drive down here, right, out of value. We've not yet taken Friday's low, but it wouldn't surprise me to go back and finish in this range, as an example. Like that's just something that ES can do. Whereas if this happens in other markets like treasuries, this is not going back in this range, for example. It doesn't have as aggressive swings. It tends to trend a little bit more. You know, if you're on the wrong side of a trade in treasuries, you know, you need to get out, because so much in the bid and offer that you need to take that into account, but it tends to take the next prices a little bit more. So you just need to factor all that into your plan and thesis, to be honest. Because you notice, if you speak to anyone that either trade ES or NQ, it doesn't need to be that way. There's tons of other products. And you also, with that video, factored in the take to commission ratio that no one really ever talks about. You know, NQ's got a terrible take to commission ratio. ES is, well, I wouldn't say fantastic, but it's better. And if you're scalping with micros, you know, you need to be taking slightly more. It depends. Oh, it depends if you like to scale out of a position. I got a fright there. I just got a notification. It depends if you like to scale out of positions, or what you're doing. If you're trading micros, it just depends. Or what your risk tolerance is. For treasuries, do you trade 10-year, 30-year? So I have up the 30-year bond, the 10-year, the 5-year, and the ultra bond. Now, I don't trade the 5-year. I'll trade the 10, the ultra, and the 30-year bond. But the ultra bond is the thinnest one, right? So you need to be relatively careful with that one. But if you have a look at the treasuries today, for example, not a single pullback today. If you have a look at it, I did take all the move. I caught a short today, and I only need something like 6 or 8 ticks a day treasuries, and then I'm done. Well, that's in the 30-year bond, because you're you know, it's like $30 a tick. You know, so if you're trading like two or three contracts there, you know, it's not long and adding up. You can make 300-400 quid in and not a long time at all, and your stop should be pretty tight. And they all tend to follow each other, so they're very much like you see with indices here. You know, you've got the four of them up, and you look at the correlations. The only reason I don't stream treasuries is because you guys would be bored out your marbles. You know, it's very slow. It's very slow. But as I say this, if you guys are starting with OrderFlow, you know, and you're finding NQ and ES challenging, you know, I trade both. I typically like to trade the first hour of the open treasuries, just because it's more volume comes in. And as I said, it's like OrderFlow in slow motion, so it's easier to read. You know, it doesn't absorb and stop run across like, you know, a point or anything. It's literally a tick. You know, and you can have like catch up trades, and one tends to go before the other. So you just need to factor it all in. It's just you may look at treasuries as a person and be like, that I'd rather put pins in my eyes. You know, it's it's, you know, if you're used to watching NQ and you go to treasuries, you'll fall asleep, literally. Yeah, so I don't trade the 5 year, and the only reason I don't is because the 2 and 5 year, I feel the tick to commission ratio is a little bit, sorry, not the tick to commission ratio, the tick value, especially in the 2 year, it's like $7 or something. Be there forever. They're really not that volatile because they're close, right? So treasury a good starting point for a newbie. Yeah, 100%, Craig. If you were to trade two contracts on the 10-year note, right? You're not, you're just not going to go bust. It's very hard. I can't say that you're not going to, but it's very difficult to go bust unless you just start going all in. You know what I mean? But there's no reason to do that, because if you're 3-4 ticks offside in treasuries, you're offside. Just kill it. You know, and as much as everyone doesn't like losing trades, if you're 3-4 ticks offside in treasuries unless news has come out or something, you're wrong, because it takes quite a lot for price to get back there. You know what I mean? Because it's so thick. Like if you're 10 ticks offside in NQ, it doesn't really matter because you blink and it's back at the same spot. I mean, there's nothing on the book. Look, you know. It's actually interesting to see as a note here, right? If I scroll all the way down here, there is 1,000 here in the whole book, right? On NQ. There is more. There's actually probably 4 times the amount of this number on one price on the 10-year. Now think about that. The whole of the bid right now, at every single price point here, even with larger orders, the 10-year is 4 times that at one price, at one tick. So it's a completely different market. So you can't have these 100, 200 tick lost days or whatever, you know. And you can take 10 trades, and if you only win one of them and scratch the other 9, you're still profitable. If you think about that for a second, you can scratch like 9 trades and then win one, and you're still profitable. There's not any other products you can do that in. You know, but again, it needs to suit your personality. There's no point going to treasuries if you find it really boring, because you can't trade it. It needs to suit your needs. So Anyway, that I would advise if you check out the recent video and you'll see what I mean. We go through the tick to commission ratio. I also put NQ in the description of that video. So you can see it's actually the worst tick to commission ratio. Then it's currencies. And then you're sort of in the commodities and agricultural, then ES, and then you've got treasuries. Doesn't really matter what treasury you trade, to be honest, what product you're in. Doesn't CME have rules for what, trader? For what rules you're applying to? Sorry. To have a look at gold and oil. Sometimes, again, gold and oil, it's not as volatile as NQ, but you're not far off it, to be honest. I'm not really a major fan of commodities, to be honest. The reason being is how those prices tend to move is just by the large companies. They're used to hedge risk. Especially on futures, that was what they were put in place for. And I would say, and plus as well, I don't really understand what everyone's obsession with gold is. Gold has been a terrible investment. I mean, if someone can correct me if I'm wrong, if you wanted to buy gold, you would just buy a gold ETF and forget about it. But then the trouble is, it's been in like a range for the last, I don't know, probably more than 5 years. It's just this year breaking out of the range. And then people say things like, oh well, if you buy physical gold, when you're in the Western world and you're buying physical gold, what is the point? Like, seriously, what's the point of buying physical gold? Because you have to pay a dealer to get in to hold the physical gold. If you're buying a wedge of it, then you need to hold it somewhere and probably insure it. And then when you go to actually liquidate the position or sell the physical gold, you need to then pay spread to get out. And gold doesn't go up that much. It's just this year. Gold is, in my opinion, used for economies where the inflation is mad, and it's there as an asset to trade value. That's the only way it makes sense. Or people put it there to instead of having cash, when the markets are rough, as a safe haven as such. But and in oil, to be honest, I can't honestly say that I'd have any edge in oil whatsoever. To be honest with you, the order flows gash. The order flow is not the best, and it's a thin book. And BP can walk in and just be like, right, we've got too much oil. We need to hedge our exposure. We'll just blast 500 contracts and smash the market. And 500 contracts in oil will move it like a lot. Hey Albert. I did. I was trading treasuries. Nothing really happened at ES in the open, to be honest, apart from a little sell-off. Large trades. Do you mean? Sorry, do you mean block trades, trader? Like the CME has rules about them, or what are you meaning? You meaning like how block trades are split up, or iceberg orders, or what are you implying? No, it's not really like Citadel and Q could. So treasuries, when ES is like this, to be honest with you, and the VIX is that low, ES is a difficult market to trade. And the reason being is, look at this action today, right? We're just now seeing a sell-off, right? But look at this. It had a slight sell-off, right? And then this was pain. Anyone that traded here just experienced pain. There's no follow through. It moved like what 30 to 40 ticks or something, but it's just this, up three, down three, just no follow through. If you traded in here, which probably everyone would because it's the first couple of hours after the open, you'd have lost money. I reckon if you go and speak to the majority of people that traded this, unless they caught this short somewhere here, and it's now down here, they would have lost money. So the VIX has got a lot to play. When the VIX is much higher, then ES is more appealing because when it gets, when this breaks here, you're getting like 20, 30 ticks, and it goes a lot harder. There's much more follow through. Whereas at the moment you're seeing, look at the amount of orders here at the low. If price does get down here, it's going to have a hard time getting through this level. The market making firms are basically saying, I'm going to hold this price down here. So everyone's just betting off it. So you're meaning like do they have large trades on like NQ and ES? So I think we discussed this on the profitability video, like what you need to, what kind of skill set and understanding do you need to have to be profitable. And Citadel, I think, is the largest market making firm in the industry, right? I think they trade just short of 500 billion a day in assets in volume, which is absolutely ridiculous. So they will have bids and offers on pretty much every market, and what that means, just so you're aware, is, do you see how these are changing here constantly? This will be a firm, so every time the price moves, they move the bids, and then the offers will move as well, right? So this is essentially what they're doing. They have algorithms running, and they continually work the bid and offer on pretty much every market. Now, if I work for Citadel, do I know what markets they trade? No. But they're the largest market making firm, so they're going to be involved in them all. And they, at any given time, if they need to, say they're working options, for example, and need to hedge off some of their exposure, and they do that in futures or the underlying, they all tend to track each other. So if one goes out of whack, then the others go to meet. Or if money comes into the actual stocks or individual stocks, that will maybe cause a move in the S&P, for example. If they see, it kind of works like a domino effect. That's how you need to think about it. So say, for example, they're at the highs on Nvidia, right? And Nvidia is one of the large caps. Makes up approximately 5-6% of the market, right? Roughly. I think the top 6 make up about 26-27%. So if they decide, right, we want to get filled in the offer on Nvidia, so they'll smash aggressively into the bid, okay? They'll lift into the offer aggressively, right? And that will then essentially trigger some stops. They'll get filled in the offer, and then in that time frame, you've got other algorithms that will ultimately be taking positions because ES and NQ are going to pop up for that, So, and ultimately, this could have been just because they had an option play. We've got no idea for this, but you can see it is definitely not a human, okay, that is moving these bids like this. It's not possible. No one is that quick. And if you've ever watched any interviews or looked into market making models, they're incentivized by lower commissions and lower margin to put bids out on every single price. They actually get paid to trade. Okay, just something I don't know if you guys know. So they would probably be happy with Scratch because they get paid to be a market maker for the CME to provide stability and no real movement as such. So it's all about a cat and mouse, There be we pay, for example, on 1 round turn on the CME with the ES, we pay something to tune of with your live broker, you maybe pay something like $3, and then if you're playing in prop, you'll maybe pay like, you know, $4.50 or something for a trade, right? These guys are paying like 5 cents a trade, for example. It's not even in the same ballpark. So they can be in and out really fast and much quicker. It's not even remotely a level playing field, to be honest. Albert, if you think this is patience, wait till you jump onto treasuries, man. You need the patience of a saint for that. But it depends. This is the thing. You shouldn't need to, like. Do you think I sit and watch order flow at this? The harsh reality of trading is majority of this stuff is just not tradable. Just because you can see all the orders coming in doesn't mean there's an edge. You know, it needs to be at a time where there's volume. It needs to be at key levels that you've already done a pre-market prep on, you know, or an area that you think is likely to be working for your edge, and then you use order flow to define it. You know, so for example, for me, this level, if I didn't catch this short at all, right? But I ultimately wouldn't really be looking to be buying this, because ultimately, you know, you wouldn't be shorting this. Once this cracks here, you're not shorting, in my opinion. You know, unless you're going for this aggressive break here, that's about it. But as soon as the market gets down here, you know, you're just asking to be haymakers if you're shorting this here, right? So you ultimately, your next play is, right, where can we catch a reversal from this? And you can see from the profile down here that we're just about to probe the low on Friday. And we were getting, as discussed, we're getting into this low volume sort of area. This is the monthly point of control right here. The market loves to revert back to high volume areas and reject lower volume. So this market, I would have liked to see, which we didn't get there, but I would have been starting to really pay attention when we got down to, say, this sort of level. You know, extremely low volume area, Friday's low, absolutely perfect level for market makers to get orders out, for people to be stopped out. And then if the market goes down here, and I would like it to do it more aggressive, so that when it snaps back, your stop is super defined. If the market probes the low and snaps back, you get in, you know, make sure your stop is the guts of 15 ticks, and then you're just holding that, you know. See if you can get your 20 ticks fast without any pain. You know, this is nice, for example, this sort of price action. But if it's going, when this happens and it's a mean reversion trade, it should be going pretty quickly. It shouldn't be going up 3 ticks down 2. You know, it should be going relatively fast, right? So that's how I would view this. I would wait for the market to be getting to these levels, because if you start guessing shit, you're not going to have any idea. I've been looking at these charts, man, for literally 10 years, and I can't tell you where this is going to go. No one knows. So you need to think to yourself, whereabouts likely is people going to stop out? Although how I look at it is, where are people likely to be stopped out? Where is the nearest swing point? Whereabouts, if I was a large firm, where would I look to get a lot of orders off? You know, where would that be? And I draw those levels on a chart, and then ultimately look to pay attention when the market gets to those areas, you know. So oh, nicely done, Albert. Nicely done. You're $30 from passing your 200k prop account, so being choosy. Well done, buddy. Patience not your strong point. Yeah, tell me about it. I do have for markets, but I typically try and pick like 2-3 hours a day and really focus, you know, and just zone in to what's going on. Because honestly, when you're staring at order flow and paying attention and doing analysis, you don't need to do any more. If you don't get any trade setups, then fine. You know what I mean? What's the best time to trade treasuries? So, whereabouts are you based? Well, I'll do it in US time. So the treasury market or the bond market opens at 8:30 a.m. It's an hour before stocks. I think it closes an hour earlier as well. But to be honest with you, there's not a real lot of volume past like. I mean, you're gonna get volume in the next hour because every market does. The sort of 4 p.m. rush. That 15 minutes from like 10 to 4 to 5 past 4 US. You always get a rush in there. But really, after like, what time would that be in US? Yeah, after like 2, 3 o'clock, and the bond and the treasuries and those markets, you don't really tend to see a lot of volume unless there's news. You see what I mean? If you go back on the charts and look at it, it's very trendy. Like when it trends and you're in the wrong side, my word of advice would be you need to get out. It doesn't you can't it's never a market that you can really average into and get out. Unless it's in balance, but I just don't recommend anyone does that. One of the worst habits I ever learned was averaging in. Ever. It's not a good habit to have. And if you do that, if you guys do participate in that behavior, go into your platforms and limit your max positions that you can have open, or contracts, sorry. Yeah, 8:30 New York, man. So you trade NQ and it's changed, like you were saying. It moves in tight range after the opens. Difficult to make good trades, so you need more patience to not. Yeah, and that's all to do with the VIX, Albert. It's all to do with the VIX. When the VIX is like below 15, the market indices are not great because there's not really any. Well, it's the fear index, right, and the volatility index. But that's cool and all, like saying that. But what does that actually mean? And how that flows into the price action is it just means there's no follow through. And what it will mean is you're not getting like this has been the best price action all day. It's went down. It's been decent enough volume. And typically if the market doesn't move in the morning session, US, then it normally moves in the evening. This is typically the volume and action that you see it open. I mean, look at this. This is nonsense. This. If you speak to any trader that traded this and they didn't lose, I would be very, very surprised. Very surprised. Because it's taken. I mean, look at this. Look at this price action. Oh, it's so miserable. I mean, you're like an hour now, like 2 hours here, right? Where it did absolutely nothing. And it's not even as if this was a short, because it's not even sweep the pre-market high. It's not really did anything. The only play that I can see here is maybe you took the retest of the breakout, or you just went balls deep and shorted this breakout or something. But for me, this is not really an edge. And the quicker when you're trading and you look at a chart and you say to yourself, I don't know what's going on here. Like I could toss a coin and it's got as much chance as me looking at. So if we open up in here, right, and this is the price action, a literal chimp is got the same probability as me is knowing what way that market's going. You know what I mean? No chance. So trade when the market's in good conditions, and that's half the battle, right? Because when you're new to trading, or you're in the habit of trading every day, because that's what that's basically what these prop firms and stuff want you to do. Is You end up trading for the sake of it, and you end up just giving away some of your gains from the previous day. So up a few points and down. So yeah, exactly. And that's the thing. There's just no follow through. That's the VIX. That's just the VIX, to be honest. And there's not really a way that you can trade this. Do you know what I mean? Because say you come up with some sort of wonky strategy, like, all right, okay, so the market's in balance. So basically, when it gets like out of whack, I'll just balls deep average into positions up here. The market will come back. But see the time that it doesn't come back, it's good night Vienna. It's goodbye account. So you can't. There's no way to trade this. You better just not. Because I can guarantee you, if this was going up, you saw some buying come in, it was breaking here, you're thinking, all right, nice, we're going to hit the highs. You bought here, stopped. Did it again, bought here, stopped. Okay, or we might go back and probe it. So you short this, stopped again. Same here. So you could have absolutely did your arse trading this range today and probably hit a full max loss for like 10 attempts, taking like 10 ticks at a time, you know. So I'm hoping I'm making my point pretty clear here, but you need to be aware of what conditions that you're in and give yourself the best chance. But yes, Dimitri's right. Hit the like button for me, please, chaps and chapettes. That would be great. Hope I'm pronouncing your name correctly, Samir. Glad you're here. Glad you're here too. Part of the OrderFlow gang. We come in here, we're a nice bunch. We like to talk turkey, discuss OrderFlow, try and get everyone to have a good perspective in the market instead of potatoing their funds away to Top Step X and that Michael Patek guy, whatever his name is. Yeah, summer trading as well, it's another thing. Excellent. Thank you, Barbarian. Much appreciated. Nice, Samir. I'm glad I got it okay. I didn't butcher it. So this is quite weird. All of the markets right now are ticking up here, but NQ's dumping. This is interesting. You don't see this very often. So one of the it's like Apple or Tesla or something been hit pretty hard, potentially. Yeah, the dude from Apex is I don't know. There's there's just there's something weird about them. You know what I mean? Something weird about them. I can't quite put my finger on it. Maybe it was the fact of their website that before they did their. It's a little bit better actually, but see before they did up their website, it was very unprofessional to be honest. But anyways, as long as they pay people out and stuff. Can you imagine if there was actually prop firms, online ones, right, that were actually there to help traders? Do you know what I mean? Like, can you imagine that actually where, you have to put them through a challenge, right? But you have an education layer to it rather than not. You don't like Apex, for example. I've got absolutely no desire whatsoever for you to do well. I mean, none. They want everyone to fail massively, is what they want. You know, Top Step on the other hand, maybe slightly better, but I don't know of any other ones where you've actually got a fair, firm, where you can properly execute and trade. It's favourable to you, and it's none of these ridiculous hoops to jump through. And they actually give you money to trade once you pass their program. Because the way that I see it with a lot of these firms, which is actually a joke to be honest, is you make money, they decide when basically you've rinsed them for enough money that they then switch you to live. But then when you switch live, guys, correct me if I'm wrong here, there is absolutely no advantage to you as a trader. Zero. All you're doing is paying higher data fees, right? And you need to give them more of your money. And they say, oh, we've got access to risk managers. I mean, really? Though? Do you know what I mean? Like, it's 2024. We can set hard stops on our trader and your with your own brokers, right? I don't need John to phone me every day and say, all right, Mr. OrderFlow, how's it going? I can see you're doing your arse in today. I can see you're nearly hit your max loss. Thanks, John. I know that. I know I'm already balls deep in these trades. I don't really need you to tell me that. Do you know what I mean? Like, is that what you're paying the 20% for, or am I being harsh? What you what do you guys think? Yeah. So typically one of the big tech stocks is typically dumping when NQ's sort of out of whack here. So you've kind of got a divergence play here, almost. Either what's going to happen when this does, NQ is going to go back into whack here, where the other indices are, and this normally never happens, and now we're pretty much there, right? You know. But we work at a pharmacy, and that might open. What's that? You work at a pharmacy, and at AM open till lunch. At my local time, it's 4 to 8 p.m. I lost me $300, and when I went home, my PM session started. Get back New York money with $80 extra. All right, now, well, at least you didn't lose. At least you didn't lose, buddy. Would not surprise me if CFTC starts cracking down on them and did with Forex funding. Yeah, I mean the difference is though, Barbarian, that CFDs and is truly the Wild West, Like at least they're trying to at least in futures they're trying to at least simulate a live market. To be honest with you, the only thing I can potentially see them cracking down on is like you're in sim, right? But then they're treating it like it's a live market. I don't know what the CFTC's view is, and that is. But then CFDs and FX is it's ridiculous, man. They can widen the spreads when they want. It's almost like a rubber band. Before news and after news, they can just literally probably go into their platform like a volume dial. Some money's going to come in there, a little bit of a pump, like a volume dial, and basically widen the spread, so it just takes you out your positions. At least in futures, it doesn't do that. Well, apparently, I think in Top Step X it does, but not when you not when you like I use Denali data feed for my personal accounts. And when I do trade prop, I've got two instances of Sierra. So I have one open with the same charts. I just execute with my personal account and then execute with prop. Same charts, same data feed as well. So I only ever use the prop firm to route the orders, and it's great. I never have any issue. I never have any bad fills. Never get taken out. The only time lose is when you expect to lose. I don't ever get positions and feel like I was, outdone or whatever, to be honest. But yeah, futures is definitely a better. It's a sort of fairer playing field. I think these prop firms. I think if I'm being completely blunt, I think Apex is the worst. To be honest, just being completely blunt about it. It also kind of cheeses me off that you've got these large streamers that are absolutely hammering these stupid discount codes to these firms because they they get paid handsomely to do so, when actually it's not good for their followers whatsoever. It's just a money grab, right? You need to be going with the firm. To be honest, you should be looking at the withdrawal process first. End of day drawdown is harsh, but the trailing intraday drawdown is. I mean, you might as well just put on a balaclava while you're doing that to rob you. I mean, what? How that is so far away from live market conditions. It's not even real. Intraday drawdown. So you take a position, you have a great trade, it comes back 50%, right? You take your profit, but actually on that trade, you've kind of lost. How ridiculous is that? You know what I mean? It's just not. I can't. There's not really a scenario that I can advocate trailing drawdown that is at all beneficial. And then you have some of the large streamers that say, "Oh, trailing drawdown, just take your base hits, just basically, just take tiny wins, and then just nail the mouse when you have really bad days, and then just nuke your account." You know what I mean? It's ridiculous. I'm on a rant this evening, guys, so apologies. It's not been much markets, more ranty. Price action was terrible. Micromanagement. Yeah, exactly, Albert. That's the way to do it, man. Trade your personal account, give yourself freedom that way. Put hard stops in everywhere. So if you do have a bad day, take it easy. But really, what it comes down to is you just need a lot of patience. So if I was to go, yeah, I would. I mean, I've not done a huge. I've heard good things about Trade Day before. I mean, to be honest, I'm not really your guy to be really asking. I mean, I've used Apex and Top Step. I looked into Trade Day ages ago, but they didn't work with Sierra, so I didn't even bother. And then that was pretty much it. So I'm not sure what other. I mean, does anyone get any other suggestions of firms? To be honest, you know, I'm not really looking to go with one that's just been started yesterday either. Um, because as you guys know, it's a grind to pass these. You're probably gonna need to do a couple of weeks, unless you just YOLO the accounts until you pass. But you need to, if you've not got experience in trading, you shouldn't be doing that because it teaches you bad habits. But with these accounts, they need to be favourable with withdrawals. You know what I mean? It should be something like, you can request a withdrawal on this day and this day. For example, middle of the month and the end of the month, you've got two withdrawal periods, and if you make money, you can withdraw. Is that very much to ask? Seriously, you know, or something like you need to have a minimum of, I don't know, 5 trading days or something. Do you know what I mean? That seems fair to me. Within from the period of each for straw, you need to have 5 trading days, and that's it. That seems fair to me. You know what I mean? So you need to have traded 5 days basically every 2 weeks, and then maybe only cap it so you can't just rinse the account. Do you know what I mean? Because I'm aware that prop firms need to cap their risk, right? I understand that, but they should stop, like, top steps, for example, this five. Wow, market's ripping at the moment. Stop this. I think, what is it, like 5 days you've got to get $200, or 30 days consistently doing that. Or not consistently, you've got to have 30 days doing 200 or whatever. Just all these more hoops, man. There's no need for it, in my opinion. But all these little snags they put in, they don't do that to help the trader. Like, I can't believe they pitch it like that. They literally have sat in a room and thought, right, how can we make this appear good, but make it pretty complicated so that it messes with people's minds, so that they can ultimately, it puts pressure on them. Do you know what I mean? But long story short, I mean, I'm ranting here. So if you want to go with prop firms, go with one that's not got an intraday or trailing drawdown. An intraday one. Intraday's a scam. I don't know how anyone can really advocate it. It is, or isn't. Sorry, it's just not even remotely like real market conditions. And then you need to make sure that the withdrawal process is not ridiculous. Like, there can't be a minimum amount or something along those lines. And that's pretty much it. That's pretty much it. Yeah, I'm just moaning. Barbarian. I mean, Apex are fine. I've used them as well. I've had payouts from them as well. They're definitely trying to get all the young people that watch the streamers who are max degenning their credit cards with 20 accounts to try and be like a streamer. That's what a lot of people are doing, I think. So think about that. They're giving away those evals like sweeties, right? And then you need to probably pay, the guts of, 2k or something to set them up, give or take. And then you blow them. That's the common occurrence. Yeah. The thing is, man, there's going to come a time. I don't want to use this phrase, but there comes a time with these firms that, because Apex does not make any money, right, out with people losing, right, and I know they've maybe got one or two people live, or whatever the case is, but they don't really advocate that. Now there comes a time in this business model where they need to keep pumping these streamers tons of money because they bring them fresh blood, right? They bring more credit cards, more volume into the business, and these people realistically have got absolutely zero chance of even reaching a payout. But eventually, if that dries up, you know, then essentially, the business almost, I hate to say it, it's very Ponzi like. You're getting money in from new people to pay the good traders. Eventually, if the failing traders fail, then the good traders are left holding the bag. Do you know what I mean? For a true prop firm, actually one of the ones that's got the best risk model, and it's not in futures, it's the FTMO company, in my opinion. How this should work is you either be putting people as live as soon as you can and actually back them, right, with real money. None of this like we'll put you live and we'll use your money that you've made anyway. Actually back someone and take a true split and incentivize them in a way with certain perks, better commissions, that side of things. Or if you're not going down that route, you need to be hedging your exposure as a prop firm. So say for example you've got traders there and you know that you're X long S&P, for example, or ES, for example, right? You need to be hedging your book out on your own accounts, so that whatever happens, you're going to be net zero. Do you know what I mean? It's the way to do it. But that's honestly my opinion. The business model doesn't make sense if your main revenue is coming in from people failing and you're not hedging any exposure or taking people into live environments or backing real traders. It's just a ticking time bomb. That's why they pay streamers so much money, because the more they plaster the brand out there, the more people that see it. And that's why I reckon they give away the evaluation things so cheap, because they'll know the numbers that when someone buys one evaluation and fails, they probably go on to buy 15. Do you know what I mean? So actually, it doesn't really matter because they know the probability if they actually pass it anyway, they're more than likely going to fail. You know what I mean? So it's just all of it. It's just a numbers game, man. At the end of the day. But if anyone has found a proper prop firm that actually is there to back traders and people with experience, then great. If you could let me know, it would be interesting. Shoot, guys, you should maybe even start our own. But geez, guys, I've done plenty of ranting this evening, eh? But good conversations, everyone. I just think you need to be careful with what you're doing. If you've got enough money, start small in your own personal accounts. To be honest, that would be my advice. Or if you're brand new and you can't trade sim like it's live, go and start one account as a prop account and get some skin in the game. That would be how I would see it, guys. Let me know if anyone's got any other questions. Wow, look at this 846 lot here. Yeah, exactly, Albert. That's the thing. You have a good week, you can just withdraw the money. It's the way to go. Probably better commissions once you start doing volume as well. You need to be doing a shed load of volume though, but that's, you know. I'm going to clear these. Look at this. Look at them working the bid here. I missed that. They've just pulled those orders. We should maybe look into other firms and prop firms and stuff. I've never really done that too much research, to be honest. It's not really been my main thing. Yeah, exactly, Sam. That's all they pretty much are, right? That's all they pretty much are. I don't see the longevity in them, to be honest. Okay, we've got 25 minutes till the volume starts to come in, which is where we can potentially change where we're at. I don't really see anything happening. Do I trade the London session? No. If I was, I would probably trade something like the Bund or Cable or the FTSE. But I don't. As I said, I think I prefer trading in the afternoons rather than the morning. Because really, when you're in, the UK, for example, you should be trading the open or the first couple of hours of the open on, say, the FTSE or DAX or whatever, or Euro stocks if you're into that. And then if you're into treasuries there, you should be trading the Bund. And then maybe Cable if you're into that. And then after lunch hits there, you're pretty much done, and you're waiting for the New York session or the US session to start. That's pretty much it. So you probably be trading, maybe 4 hours a day or something. I like to try and well, I think you'd maybe be trading somewhere between 4 to 6 if you were to trade both sessions, depending on the volatility. But I personally only like to try to get in, 2 or 3 hours a day. That's about it. Any more than that, my brain's fried and I start, hitting the keys like a monkey. So. Well, you need. Well, this is the thing. US market. There's not really any. There's not really any volatility because all the volume is done for the respective markets that they trade, right? So FTSE is the UK's index. So that's when the most volume's going to be done in the UK hours. And then the Euro Bund is the equivalent so if they're like, I don't know, probably 10 year, 5 year, something like that, but it's a little bit more volatile and it's a little bit smoother price action. FGBL, remember off the top of my head. So if you're spread trading, and then you can obviously trade the gilts and stuff. So and this is pretty much it. I mean, should you be trading the markets with the region you're from? Probably not. It just depends your trading schedule, to be honest with you. A good question, Craig. My trading is typically from 1:30 p.m. GMT till till probably 5. I don't take any new positions from 5. If I'm holding positions, then yes, and I try to be out by about 1 p.m. So that makes it from 8:30 a.m. US to 1 p.m. is my is typically my session. I tend to do better in the morning session of US than I do in the evenings, and most likely because, I mean, take a wild guess, because I'm tired. We've had a full day, so you know what I mean. But yeah, with NQ's now dumping a little. Let's see if we can. What's going to happen in the next 10 minutes? Should be interesting. Clear this for you so we can see what flow is coming in. We are absorbing this breakout area at the minute, right now, so it would be nice if we are to go back down, this would be the time. We are seeing a bit of negative delta come in too. I think you can go down, there we go. This should see us drop that a little bit more. Does anyone execute off the DOM with NQ, or do you just use it for correlations? I typically use it for correlations, to be honest. But do any of you guys trade any other markets? Does anyone trade any commodities or agricultural ones? Like your corn, wheat, soybeans, lean hogs, anything like that? I mean, let's be serious, I don't think. Sorry, my mic just died. I don't think anyone's getting business trading that unless you've got experience in, I don't know what, farming or something. I mean, realistically, what is someone from the UK going to know about crops in different markets? You know what I mean? It's a bit far-fetched, seriously. It's all about playing to your strengths in different markets, right? There we go, NQ's going. Can it go? Some buyers come in here. And this 82 and a quarter. Yeah, so I mean, we've got 6 minutes till the burst comes in. Are we going to go and just fill out this sort of lower volume area here at the the 04s and 08s sort of range on ES. We've got this low down here. I mean, these orders have been planted here now for a while. ES is trying at the moment. It's trying to hit into the bids. Okay, here's everyone, let's do a poll. So put H in the chat if you think we're going to close higher from here, or put an L in the chat if you think we're going to close lower from here. Let me know what your thoughts are. Do you use a setup for entry on market? So what do you mean, Vic? What's my setup to enter, or what do you mean? Sorry. Or do you mean lower? Nice. What do you mean? Is it do you use a setup for entry on the market? Okay, so everyone thinks it's going down. So we are absorbing this level at the minute. NQ is the one that's holding up. If we can tackle down here. Ah, right, okay. So over the years, the many years I've been executing, I suck at breakouts. So see this sort of stuff? Like the amount of times in my career trading, I've just got abused trading this breakout stuff, so I just don't bother. So I look for sweeps of levels. So like, you know, down here where we sweep a previous day's low or a swing point, or we sweep the low of the session, you know, I'm waiting to see absorption and then ride it back into the range. And then maybe at a push I'll take a break and retest, but I'm not ever preempting a breakout really. I just get burnt too much doing that over the years. So I'm more of a mean reversion guy, but you have to be careful with mean reversion. Just because it's far away from the point of control doesn't mean you just fade it all the time. So a lot of discretion and screen time you need. So if I'm looking for there's a couple of key conditions. For example, I prefer a market to aggressively come to my level, and I know people a lot of the time shit themselves when the market's moving aggressively into their level. And the reason you do that is because you think, oh shit, I'm going to get steamrolled here. Yeah, you are going to get steamrolled at times. Of course you are. That's inevitable. You guys have seen me got steamrolled in positions. But the times that you step up and take that trade, okay, the market's going here, can NQ continue on down? If it does, ES is. The times that you take that trade and it works out, you're instantly correct. And the type of price action that I'm not a fan of with, you know, mean reverting, for example, is when the market has this, you know, slow grind, you know, like this slow grind up into an area. If this was to slow grind up to the high of day, or sorry, the pre-market high here, I would be less inclined. I much prefer it when the market aggressively comes into a level, because then it's got a better chance, you know, of coming back just as quick. That's typically, I call this like the grind of death, you know, because it just never stops grinding. So hopefully that makes That makes some sense. And then to confirm the levels, I want to see absorption. So if I was to be taking this, we'd see the market come back up into this level, which was seen, and you want to see the market being rejected. You want to see some size come in and some sellers starting to show some aggression, which we'd seen here that the delta was starting to become negative, yet price was going up. So we saw sellers starting to feather in. So if this goes down any more, these people that bought up here are going to need to puke pretty soon. So they're going to need to become sellers soon. But then the trouble is, when you've got these large orders here, you can see the bubbles. The market likes to trade out these areas, or at least reverse when the market does that. So this is not really the time. I mean, we're just kind of guessing right now, to be honest. But if this was in a decent volume time, and say it was like we broke here at the open and then we can back up to retest and we saw absorption here, I would potentially look to sell. If it doesn't go quickly, then I'm out. Like this, for example. So if you sold here and this didn't go here, I would be scratching right now. I would just be scratching, because buyers should not be coming in. We're seeing positive delta come in. This is not great if you're looking to short. But we'll see, that was the first initial burst of the volume, so we've probably got 10 minutes of the size coming in, and we know the market can go crazy here. It could actually end up back right in the center of this range, to be honest. And I think I was saying this earlier, that when this was down here, it's very characteristic of ES just to end back in the range. It does this a lot. So there we go, some size just coming in. We're obviously plus 5k. 5k delta on the day here, yet we're just hitting the initial bounce low. So this is acting at a wall right now. Let's see if sellers can protect it. We are seeing a bid up here in all indices at the moment. So last chance saloon here for the market to be closing lower. I think people, was about here, wasn't it? It was about this area. We'll see who's going to be right. It was about this area when we did the little mini poll, right? We're just seeing buyers tear through this right now. Okay, so let's see if they're going to take the next price. It's just seen 500 odd contracts absorbed here. The market's ticked down. NQ needs to be going. And then they're flashing the bid here. They do this a lot and then pull it. Classic. Sneaky. See that? Yeah, honestly. Spoofing at its finest right there. Push the 100 lot, market then ticks up and then pull it. we're seeing a lot of buying come in. So for example, right now, if they cannot crack this level, then shorts are still in play. But ultimately, if you are cracking, probably 19s, then you're out. Wow, look at the size that just come in there for NQ. NQ is really trying. Maybe it's at the lows a minute ago. There we go. So this is what I mean by this price action, right? The market pops up 4 or 5 ticks, then back down, Not ideal. So you guys ready? Next 5 minutes there's going to be some crazy volume coming in where we can effectively take all this back, but look at this now, this meaty stop. Run, we've taken all of the liquidity down here and then we're right back where we started. Classic. So hope you guys have enjoyed. Plenty of ranting this evening. A little bit more ranting session than trading, which is always good fun. It's nice for you guys to know where I stand, to be honest. I'm certainly with the traders rather than shilling prop firms, that's for sure. Look at the size here in NQ. Wow. They just took it all as well. No problem. No problemo, but we'll be 2 minutes here till we see what the crazy volume is going to do. This will be interesting. I'm just going to pin the link to the coffee for anyone that wants to support the channel. This is greatly appreciated. For anyone who would like to show some extra support, you can support however much you want, a couple of bucks, whatever you fancy. Okay, here we go. Let's quickly clear these DOMs till we see this action coming in. 2 minutes of mayhem. 1,000 contracts absorbed here, cleared. I mean, this could sweep here now. Wow, what a crazy end to the session! Right back into value. So, whoever said higher is correct. We are currently ripping. Wow, look at the amount of delta that's just come in there. There's just been about 12k deltas just come in the last 10 minutes. Jeez. That's a lot of buying. Like a lot. So let's see if we're going to sweep the... let's quickly draw this out. If we're going to sweep this level, you'd never have thought they were getting up here. Let's see if they sweep it by a tick. Crazy. So there's not any difference, Albert. It's just if I like to have cumulative delta here, so if I'm not paying attention, I can just see it depicts it a little bit differently. So I can quickly glance and see what's the total delta for the day, and this allows me to drill down into each specific price. So like right now, so when I refresh this, it only refreshes every minute if I clear it with my hotkeys. So in the last minute, there's been negative 435 delta at this one price, and so on. This gives me the visualization for the day. And hey, look at that. We're probably going to end right at the POC. Classic. So hope that makes sense, Albert. Just seen 600 absorbed there, next price taken. Let's see if they can go back down to the POC, but that's pretty much all she wrote. Can't see is they've done their sneakiness, swept above this level here. But yeah, look at that, right down, hit the initial balance low, managed to break the wall of initial balance and retest. And this was where, when I said if you were shorting this to go back down and retest the lows, this candle, when we said that you should have been out, we called, because if the market was to go down, it should have went down there, right? Buyers, this is not behavior for your short position. There's no reason why this should be going back up. It's already absorbed these levels, you know. So that's where you need to be quick to be going, you know, quick to cut. Because if you held on to this, you'd have took an unnecessary stop, or you thought, right, this is never going to go back up here. It's now up here, and you're, you know, balls deep in the position, for example. Whereas if you just recognize that this behavior is not what should be happening for a short position, okay, rather than having your standard risk to reward that you need to go for, you know, you need to stop that thinking. And if the trade is not going in your favor and it's not doing what you're expecting, there's no point cutting it up here when you can cut it here. You can always re-enter, you know. If the market went all the way back up here, you know, failed again, and then we come back down, then you can have another crack at it. You don't need to take a full stop just for the sake of it. Do you know what I mean? Do you guys agree with that outlook? Because it keeps your losses tight. Right back at POC. How cliche. Textbook stuff, really, isn't it? It's hard to catch the V's as well, the V reversals. Just went. Yeah, that's the way. That's the way to do it, in my opinion. If you've got any other ways that work for you, by all means do it, man. Could just say, for me, the amount of times I've taken unnecessary stops just for having a fixed risk to reward, it doesn't make any sense. I think that is pretty much us, guys. That's the sort of initial sweep of the volume done. We're just going to chop around POC now. So, with tight stops and higher volume, is not more likely to get spikes and hit stop. No, not well. It depends what you're trading, Albert. If you're 15 ticks on ES, for example, no, because if we draw the chart here, right, 15 ticks. If you were short, say here, right, 15 ticks is the guts of this high, for example. So if a 15 tick spike in ES is not that common. If you get a 15 tick spike in ES, there's news, or you're just offside on the position. You shouldn't really be if you're 15 ticks off, you're offside. Do you know what I mean? On NQ, it's a different story, because NQ, if you sneeze, it moves 20 ticks. So your standard stop for NQ probably needs to be like 40 or something. I'm glad you guys enjoyed it. I'll be chilling in Discord for a while. If you want to chillax in there with me, let me know. If anyone wants to support, there's a link there. And I'll see you guys. I'll try and be live tomorrow, a little bit earlier. We'll see if there's going to be some volatility tomorrow, but we can come in and we can chillax. Okay. And also let me know if you guys want some other video types, what you would like to see, so I can get some content produced for you and some new videos to what you would like to discuss. But I'm glad you guys enjoyed it. But until then, till tomorrow, or until you guys chillax in the Discord, if you're not yet joined, make sure there's a link in the bio of the channel as well. If you want to go in and join, it's there. It should be a never-ending link, so you can join at any time. But until then, guys, you guys have a great evening. Okay. And stay green for your session tomorrow. Cheers, guys. Peace.